Did you know that in 2025, Dubai's population crossed 4 million people? One-bedroom rental contracts hit 134,000 and new rents average 73,000 dirhams. And yet, we still haven't reached the previous rental peak yet. Something doesn't add up. Today, I'm breaking down exactly what's happening inside Dubai's rental market, what's hype, what's real, and what you should actually do next. As always, bringing you the unbiased truth in real estate, so hit that thumbs up button, subscribe, and let's get into the video. Rents are rising, but not at all-time highs. Let's start with the data. According to DXB Interact year-to-date data for one-bedroom units in Dubai, average new rents sit at 73,000 dirhams. That's a plus 4% increase. Average renewals for one-bedrooms is at 55,800 dirhams, which is actually a 10% increase. So what does this tell us? Renewals are rising faster than the new leases. Landlords are pushing increases only with the index through RERA limits. Existing tenants are absorbing hikes rather than moving. But here's the interesting part. If we zoom out and look at the yearly median rental chart, we can see that for a one-bedroom in Dubai, median rent in 2016, price was 64,000 dirhams, while for the median rent in 2025, the price was actually lower at 61,000 dirhams. We are still below the 2016 market peak. So when people say rents are at all-time highs, that's not fully accurate. Yes, in certain areas. Might be Dubai Creek Harbor, Blue Waters, DIFC, and of course City Walk as well. These have exploded. But Dubai as a whole, not at historic peak levels yet. That, for a second, matters because it suggests there might be still room for gradual growth. Now let's look at the other side of the equation. Population growth and rental contracts are exploding. Dubai's population in 2024 was at 3.8 million. 2005 plus 208,000 people and it reached 4 million people. That's a 5.43% year-on-year growth. That is significant. Now, it could be the same as in 2016. However, let's look at the number of rental contracts. One-bed rental contracts in 2016 was at around 40,000. In 2025, it's nearly tripled at 134,000. Actually, not even nearly. It's over 3 times. Let that sink in. Rents increased, but in this case, the demand increased even more. This tells us that in this case, in these years, the market is not simply speculative. It is also demand-driven. More residents, more job creation, more companies relocating, and more entrepreneurs. And this supports the rental stability. Now, here's where it gets interesting. New supply, in my opinion, might change the game, but only short term. According to College Times, from 2026 onwards, significant new supply will enter the market, especially in some areas. JVC, Dubai Hills Estate, Dubai South, and Arjan, or Dubai Land. Experts quoted in this article that the wave of new supply onwards from 2026 will give tenants something they lacked for a while, and that is choice. This is important because for the past few years, landlords had the full power due to the scarcity. But with more handovers, tenants gain negotiation leverage. Landlords must, on the other side, focus on quality, and realistic pricing becomes crucial. We may see short-term rent recalibration, competitive pricing in certain clusters, better furnishing offerings, and more incentives to the tenants. But here's the bigger picture. If population growth continues at 5% annually, supply may only temporarily soften the prices. And once absorbed, rents could resume climbing. Paying rent in Dubai is also changing. That's another trend that people often ignore. According to Gulf News, there are top 3 payment methods now prevalent in Dubai. The most traditional one, which is the post-dated checks. Number 2 is the bank transfers. And the third is the digital platforms and monthly installment payments. Platforms like Property Finder alongside Keeper are pushing for these models. In 2025, just a few months ago, Property Finder announced a partnership investment in Keeper, a startup that allows tenants to pay rent in monthly installments. This changes the psychology because instead of paying rent in 1 or 2 checks, tenants can now pay monthly, which in consequence means that higher rents are more accessible. Because if the tenant can actually split those payments into 12 instead of just 1 check, they could definitely start thinking of other more luxurious, maybe bigger options for themselves. It also opens opportunity for landlords that are targeting flexible rentals, furnished units, and premium lifestyle offerings. The market is modernizing. However, some areas may still see and already started seeing corrections. According to Time Out Dubai, some areas already started experiencing corrections. International City, Discovery Gardens, Silicon Oasis, and parts of JBC already. These are happening because are typically high supply clusters, investor-heavy communities with very similar units and no diversification, and generally mid-market units. This reinforces a key principle that location and quality matter more than ever. Prime waterfront, strong. Oversupplied mid-tier though, pressure. Now let's talk about the oversupply fears. Another Khaleej Times article asked, will Dubai see oversupply in 2026? The consensus, supply is rising. Yes, but demand remains strong. Population growth is outpacing many global cities. Investors are also becoming more sophisticated, and financing conditions are becoming tighter, which reduce speculation. Unlike 2008, the escrow laws are very strict nowadays. Developers are better capitalized. Regulation is stronger and data transparency exists, such as DXB Interact, for anyone to access. Oversupply risk is segment specific, not city-wide collapse. So what should you do now? Here's my view. If you are an investor, focus on prime and scarcity-driven assets. Avoid many supply clusters without diversification. Target strong tenant demand zones. Analyze rent indexes, renewal growth, and stress test cash flow scenarios. However, if you're a tenant, you need to lock in longer-term rents, negotiate during handovers, explore emerging communities, and consider flexible payment models. We're not panicking now, it's not a panic mode, it's more of a positioning. And if you're unsure which strategy fits you best, at Agora Advisory, my investment advisory company, in our one-to-one sessions, we analyze rental performance on micro areas, draft best, worst, and base case scenarios, compare short versus long-term rentals, structure mortgages versus cash purchases, evaluate IRR, net yield, and most importantly, leverage impact. Rental market decisions today will impact your returns tomorrow, and that's not something to guess. So please do reach out. The links are in the description, and I'll see you in the calls. Now, to wrap it all up, Dubai's rental market isn't crashing, obviously. It's definitely evolving and maturing. We have more supply, more tenants as well, more flexibility, and most importantly, more data to analyze. And the investors who understand all these cycles and not just the headlines are the ones who will win. As always, bringing you the unbiased truth in real estate. Hit the thumbs up button if you found this video useful. Leave all your comments in the comment section below, and I'll see you in the next one.